Kitco News special coverage of Bitcoin 2023 is brought to you by Coin Payments, crypto payments made easy.
We are wrapping up our coverage at Bitcoin 2023 in Miami, and one of the consistent themes of this conference has been that Bitcoin is the solution to the increasing threat against freedom and liberty and the prospect of CBDCs, or central bank digital currencies. And who better to discuss this with and wrap up the conference than Robert Breedlove, host of the What is Money podcast, and Mark Moss, host of the Mark Moss Show and partner in the Bitcoin Opportunity Fund. Very nice to have you both.
Great to be here.
It's the power panel.
Yeah,
it's the power panel as we wrap up. A lot to discuss. But I want to kick things off, Robert, with your keynote address, where you said the source of cultural fragmentation is fractured money, which leads to fractured hearts, leads to fractured minds, leads to a fractured society. Wasn't the most optimistic sentiment, but very insightful. Explain that to us.
Yeah, hopefully it's just descriptive of what's going on in the world. And the way I see it is you've got technology, which is upstream from economics. Economics is upstream from culture, and culture is upstream from politics. And so if I work my way backwards through that, when we look at fractured money leading to fractured societies, the world wants one money, right? Money is a technology that intermediates trade. So we want, the deeper our trade networks are, the deeper the division of labor is, the more wealth we can create, the more problems we can solve. But today we have all these regional monopolies around the world in every nation that has basically monopolized the local currency. So we have 200 some odd nation states and 200 some odd currencies. They were all derivatives of gold originally, but now they've been decoupled from gold, and we have these little fractured pockets of monetary monopolies around the world. That inhibits trade, it inhibits the free flow of goods, it enables taxation, oppression, inflation, all these things that are not good for individual liberty. So fractured money leads to fractured societies. I think it also feeds into fractured minds because price changes in a market where money is monopolized, you can't tell if it's supply and demand that's moving or it's just Jerome Powell's latest decision, for instance. So you can't make sense of the world from an economic standpoint. It confuses entrepreneurial activity, causes a misallocation of capital, induces people to overborrow. So it just causes a lot of disturbance psychologically. And then I guess the fractured hearts might be a bit of a stretch, but as we were talking earlier, in this world where people are being robbed all the time, they're so desperate to keep up with a rat race that they don't really take time to discover what they're best at, right? Like, what is the thing they're good at? What does the world need? What can they do profitably? They're not as free to explore their entrepreneurial impulse because they're just trying to stay ahead of inflation and oppression all the time. Everyone's trying to outrun the theft. So I think the more we get central banking and theft out of the equation, the more you create conditions in which people can discover what they're best at.
That is a very insightful way of looking at it. And in fact, Robert, when you first interviewed with me, you wrote a piece where you said that central bank printing is akin to modern day slavery. And that was one of my aha moments with Bitcoin and revisiting how we see the financial system.
If you think about that, I mean, in regards to modern day slavery, if one group of people must trade their time for money and another group of people can print the money,
right,
what does that lead to? If I'm able to keep 100% of my property and the fruits of my labor, I would be free. If I give up 100% of my profits and labor, am I a slave? Yes. Okay, what about 50%? Half slave.
That's
yeah.
Right. By definition.
By definition.
But more importantly, the more you work, in theory, the more you save, but then the Fed goes and prints more money, diluting the value of your savings and therefore your time and effort.
That's right.
But we've gotten to a point where people, unfortunately, 60% of Americans don't have $400 saved for an emergency. So they're not saving, nor is the Fed stealing from that. They're stealing from their time. They're stealing from their life. So at 8% inflation, where we were just last year, that means the average American costs have gone up by $325 per month. If you make $32 an hour, that would be 10 hours of your life you'll have to work extra just to have the same quality of life that you had the month before. That's 10 hours that you could put into your health. I could spend on my relationship with my kids. I could learn a new skill so I could increase my income, or any way that I choose. But that's my life. And they've literally stole 10 hours per month of that by that 8% inflation.
And Robert, you were making a point earlier that we shouldn't even be discussing inflation and the Fed and the macroeconomics, even though we do, because that feeds into the system that we should ultimately be moving away from.
Yeah, this is a bit of a pet peeve I have, is that when people are intelligent enough to understand the macroeconomic landscape and how it works, if you only speak about, what is the inflation rate going to be adjusted to, what is the interest rate going to be adjusted to, what is the current CPI, you're speaking a language that is within the paradigm of centrally planned money. So if you only speak in that paradigm and you never step outside of the box and say, hey guys, how about we stop centrally planning the money? We know central planning doesn't work in any other market space in the world. Why do we think it works in the most important market space in the world, which is money itself? If you just stay in the box and you only speak their language, then you're kind of implicitly justifying the scam. So I really like macro thinkers like Mark, like Lynn Alden, right? They get it, they can talk about it, but they'll also step right outside of the box and say, this whole thing is bullshit, guys. It's smoke and mirrors. We need to stop doing it.
We've had Republican presidential candidate Vivek Ramaswamy speak at this conference, and he said that his platform is going to be to reform the Fed and to make it an election about sound money. Would you think that the Fed should be reformed, or if you do opt for a Bitcoin standard at some point, that negates the whole idea of the Fed?
Well, it certainly negates the idea of the Fed. And the reason, back to what Robert was saying, is that the Fed's whole purpose is to manage the supply of money, or more importantly, the price of money. And it's easy to see through many counts of history that price fixing always fails horribly. But when you're setting the price of money, you're setting the price of everything. And I think back today, now more than ever, every single month, we all look to Jerome Powell, the Fed, coming out of the FOMC meeting. What is he going to say? What is the fate of our world hanging in the balance of what this guy says? And I think of how insane that is, and I compare it to waiting for the groundhog to come out and tell us if spring is going to come. Like, that's literally where we're at. We're waiting for one guy to tell us what our fate will be. And so to your point, yes, the Bitcoin going to a sound money will negate that. We'll take away the need. The problem is, back to Vivek, and I love what he's talking about. I support that. Moving from one system to the next is not going to be easy. It won't be smooth. And if we just said, hey, let's just get rid of the Fed, let's go to a fixed money standard, there is going to be massive destruction along the way.
Right.
Yeah, I think the only reform that's effective for central banking is to totally abolish it. There's no incremental reform that will ever work. There's a saying that incrementalism in practice is, or in theory, is perpetuity in practice. So if you're going to reform the state and say we're going to take property taxes from 10% this year to 8% to 9%, it will never happen. You just have to fundamentally look at the entire system of what's happening, that people are being robbed through inflation, and say, enough. This is unethical, it's unjust, it's uneconomic, it's destructive to wealth, it's destructive to innovation, and just throw the whole thing out. We have to move to a new paradigm. We've done this time and time before, right? We've moved from old paradigms to new paradigms, and we don't look back. So I think we're going through one of those transformations today.
That would be a very drastic step, and as Mark said, would cause a lot of chaos.
Yeah, but what do they say? Rip the Band-Aid off rather than do it slowly?
So I think back to what Vivek wants to do, I think the Fed, well, and actually all of politics is set up in a way that it can't be changed or reformed. And the Fed is also the same way. So I believe the president gets to change, one seat. They get to elect the Fed board governor, but they can't change enough of the seats in their presidential term to really change, fundamentally transform what the Fed is doing. Over 2 terms, they could move more seats, but the Fed could do whatever they want to affect what's going to happen, right? They could crash the economy and that president wouldn't even get another election. So while I appreciate that, we've seen many politicians come in fired up, willing, ready to change the world, but the system is designed not to change. And so kind of to Robert's point, which is valid, you maybe shouldn't change it. I don't know if I quite agree with that as much. Right?
Robert just wants to blow it up.
Right, he wants to blow it up. But I think... and
replace it with something good and pure.
But you might have to, because you can't really change it and set up in a way to not to. Now, what we can do, though, is that their policies have diminishing returns. So when they used to print $1, they could get $3 or $4 worth of growth. Once we've gotten past 90% debt to GDP, those dollars are now not earning enough growth. So we're maybe getting 80 cents of growth for a dollar or 50 cents. Now we're up to 125. So we're seeing the law of diminishing returns. So the money printing is working less and less and less. So the boat is going down. Now we could just blow a hole in the boat and let it just sink, or we could just slowly start getting people onto lifeboats and then somewhat cushion the blow when the inevitable happens. And I think that's kind of the path that we're on.
And of course, Bitcoin is the lifeboat.
And just to clarify, I think we should commit our energies to building the new, not fighting the old.
Right.
And in building the new, you transform the paradigm. So
Right.
do I want to blow it up? No, not necessarily. It's going to die of its own natural causes, as fiat always does. I want to focus my energies on educating people about Bitcoin and getting people on that lifeboat.
Yeah.
Well, one of the big themes at this conference has been another potentially new development looming on the horizon, an ominous one, and that is that of a central bank digital currency.
Yeah.
We had also a presidential candidate on the Democratic side, Robert Kennedy Jr., speaking about CBDCs, and it has been a pervasive theme in many of the talks. Firstly, Mark, you have done a lot of work on CBDCs, central bank digital currencies. For our viewers that are still not fully on board with what a CBDC is, break it down for us.
Sure. CBDC stands for a central bank digital currency. Now, what does that mean? Well, first of all, 80% of dollar transactions are done digitally anyway. So what's the big deal? Well, a central bank digital currency is different in two ways. First of all, it means that I have an account directly with a central bank as opposed to regional decentralized banks that can make independent decisions. So we can go into a lot of why that's bad, consolidated the banking down to that level, but on a decentralized banking standard, like we have now, then independent banks like my local area has a relationship with me, knows what my local area needs and can give me loans based off of that versus some bank in another country or, on the other side of the world that doesn't know what I need, nor do I have a relationship. And so that makes consolidation of banking will lead to a consolidation of the business. So that's step number one. But the big problem is that money as we know it is gone. It sort of already is. Gold was money. I could hold that money as a bearer instrument. I could bury it in the backyard. Even today we have cash, and I could put that cash under my mattress or in my safe. A central bank digital currency is a complete digital currency that I don't have. What we basically have at that point is the government gives me credits. And they decide how many credits I get if I'm a good boy,
right.
And they decide how many of those credits they will take away if I'm a bad boy. They can also decide what they can do with those credits. And so the big difference here is the government can already freeze my bank accounts if they want. They can already surveil my transactions if they want. But this is preemptive. This is programmable money. So now it's pre-crime. Now it's, hey, you've exceeded your carbon score, so maybe you can't buy gas. Or you've eaten, Robert eats way too much steak, your carbon score is too high, no more steak for you. Nothing good happens after midnight, so your money doesn't work after midnight, on and on and on. And we've already seen examples of this to already know where this goes. And of course, we've seen enough of the dystopian movies as well. So that's what a central bank digital currency is. No more money. Our government gives us credits based off of how good of a state actor we are, programs in advance what we can and can't do with that money. And it's the ultimate form of control. It's the ultimate form of stripping private property.
That's right.
And taking away our ability to use that private property as we see fit.
I would say it's the ultimate mechanism of social engineering as well. The Chinese social credit score system, in which if you say the wrong thing about the government, they'll turn off your money, or they'll disable it for certain purposes, or they'll publicly shame you on billboards.
Yep.
All that system it absolutely depends on the CBDC. If you cannot control the money, you cannot socially engineer people to that extent. So if you don't want to see social credit score systems in the West, then I think you have to refuse and reject CBDCs at all costs.
And as you said, people will start to self-censor. Yes. Or self-monitor because you're concerned that you'll be taken off the system or punished, so you stop doing certain actions in advance if it goes to that.
And we already are. Before we started recording, we were already asking you about just putting this show onto your channel. And so we don't even have that system in yet, and we're already self-censoring. Right. Imagine how much further down we would be if once that's in place.
It's a tremendous impediment to freedom, not only freedom of movement and freedom of expression, but even freedom of thinking.
Yeah. Now we have a saying in Bitcoin, and Robert and I were talking about this, like, everything's good for Bitcoin. And the reason why we say that is that we grow through stress. We need an attack to figure out where our weaknesses are, what we need to change, how well we can strengthen, and so forth. And so while we don't want that stress, that's what it takes to grow. And so these attacks that we're having against Bitcoin specifically are making it stronger, but they're also highlighting the reason why we need them in the first place. Right. And so it's pretty interesting that we have this right now where we have this Biden administration that wants to enforce this and put this in. And then to your point, we had presidential candidates here that are running on this Bitcoin platform. But I think it's not about Bitcoin versus CBDC. It's about, do you have the right, do you have the freedom to own your property? Right. And control your property or not. That's what it comes down to.
Yeah, and in its most essential form, property is freedom, right? It's the fruit of your past freedom. You've gone into the world, you've taken your skills and faculties, and you've created something of value, and now you keep that value. If someone's stealing that from you, we always say life, liberty, and property. Life is your future, right? If I kill you, I steal your life. I've taken your future from you. If I put you in behind bars, I've taken your present freedom, your freedom to move about. And if I take your property, I've stolen your past freedom. So we have to be very clear that when you're printing money or debasing currency, it's only doing one thing, and that's violating the private property of savers. So when we say like it's against freedom, I think it's deeper than that. It is a direct theft of freedom when you steal people's property.
And this gets a little philosophical, but it's important to understand it at this level, right? So if I'm working for an employer and I'm living paycheck to paycheck and I need that money to live, no matter how mean he is to me or what he does, I can't quit because I don't have that money. And we can think of private property as a battery, right? So I could work 4 hours to get the money that I need to live, or I could work an extra 4 hours and I could save that extra energy in this form of money. And tomorrow I could not work and I could spend it. So it's like this life battery. And so if we're not able to store our private property or save our private property, then we're a slave.
That's right.
Because we don't have that battery to fall back on.
And back to that earlier point where you said if you have a 25% effective tax rate, right, you're basically 25% a slave. To put that in quantitative terms or temporal terms, if your effective tax rate is 25%, that means you're spending the first 3 months of every year working for your government. Yeah. And then the last 9 months you work for yourself. Now if it's 50% at 6 months, et cetera. So just think about it like that. Like, who are you working for in this world?
Only to then have your money further debased and devalued
without
as they
even
go ahead.
including inflation.
Yeah, when they go ahead and print stuff. But let's focus on the CBDC idea some more, because as you said, we had a few politicians here discussing it. And the consensus is interesting because we have both Democrats and Republicans.
And Tulsi Gabbard in the middle.
Yeah, seemingly come out against a CBDC. We chatted to Michael Saylor, and his thinking was that because it's such a politically divisive topic, neither party is going to want to embrace it, therefore minimizing drastically the chances of a CBDC being implemented in the United States, which helps me sleep a lot better at night. I mean, obviously, we're here in Florida where Governor DeSantis has banned a CBDC. Can we count, do you think, Mark, on political gridlock to prevent a CBDC in the United States?
No.
No.
No. So nobody wants a CBDC. There's going to be massive pushback to a CBDC. The American people hopefully would make a bunch of noise, and to your point, DeSantis and North Carolina as well have put bills in to prevent it. So let's just call it something different.
Rebrand.
80% of transactions are digital anyway. We might be using CBDCs without even knowing it. So of course they're not going to call it that because nobody wants that.
But it's not programmable by the government yet, the digital transactions that we're doing. Yes, but that would require a reframe.
Right.
And
so right
reset.
now, if 80% of transactions are done digitally, I mean, I'm a strong advocate for this, and I just don't carry that much cash around. I just use digital transactions. What type of software do these banks use to move it? How do they move that money from ledger to, I don't know. So if they change that and they use a different type of ledger system, how would I know?
Something like FedNow in July, perhaps.
Right.
Yeah.
Yep, FedNow
right.
launching.
And so, and the other thing is that, unfortunately, I hate to say this, but this is the direction that we're going. This is why we need something like Bitcoin, because Bitcoin introduces constraints that can't be gotten around. But the problem is that these bills that get brought forth that are horrible, nobody wants them, there's an outrage for it, they take it away and then they just bring it back. They rebrand it, they stick it into some omnibus bill. Yeah. And so, no, this is the goal. This is where we're going. They have to put this in because it's the final piece that they need for the censorship and control. So maybe we defeat it now and, it comes back and it's snuck in.
So you're saying there'll be perhaps a more subtle way of bringing in the CBDC, a rebrand and a clandestine CBDC without you noticing it.
Well, you could add to here the prospect of a crisis.
Yeah.
Right? They'll just engineer an economic crisis. They'll blame Bitcoin. Right? It's all those guys buying Bitcoin that caused the economy to collapse. But don't worry, we figured out the solution. And it's this not called CBDC.
Right.
And, our government's proven that they never let a good crisis go to waste. So I'm sure.
Well, we have a pretty good crisis unfolding as we speak, and that's the banking crisis.
So think about the banking crisis. So you lost your money in the bank, but don't worry, the FDIC has it insured. No big deal.
But you want
So
it,
if you want to get your $250,000 that FDIC is insuring, just fill out these forms,
Yeah,
download this
app.
wallet,
Yeah.
and there's your money.
Yeah. And if you want your UBI,
If you want
you
your
get
UBI.
8% a year on your savings, plus you get your UBI, but you got to download this app.
Your universal basic income, just to clarify the acronym for our viewers.
Yes.
And this is how they roll it out in China.
Well, this is how it's happening in Nigeria. They're now paying welfare in Nigeria through the Naira, their central bank digital currency over there, after they said they were going to change the physical paper currency, the banknote, asked everybody to turn them in, and then ran out of the new paper currency and forced people to adopt more and more of the e-Naira. And there was a lot of crypto adoption in Nigeria before that, and now welfare payments are being made that way. But I would like to think that in a country like America, you couldn't sneak something like that in.
Never happened.
Well, read the book The Creature from Jekyll Island. We got the central bank by sneaking something in. Right? It was done over Christmas. Yes, there's precedent for it. So I wouldn't say it's out of the realm of possibility.
And if you go back to when the pandemic first broke out and they started putting the stimulus packages together, in the first stimulus package bill, they put the CBDC language in there. Now, it got defeated and it got kicked out, but they were sneaking it into that bill. And so you would like to think they wouldn't be able to sneak it, but they do it all the time.
So you think a CBDC is also inevitable, as Mark says?
I say without a doubt it's going to be attempted. Bitcoin is it's an existential threat to central banking. So there's going to be a competitive response, right? If a new business comes on the block and it threatens your business model, you're either going to try to acquire the thing or you're going to try to put them out of business. And so the central bank has to make a competitive response. Otherwise, they're not going to be able to survive a Bitcoinized world.
Mark, you and I were chatting about this because I've interviewed a lot of people on the precious metals side of the equation. I've seen you at those conferences as well.
Sure. I used to be a gold bug.
Yeah. And they say, yes, CBDC is coming. Yes, the CBDC is evil. They say that gold is the solution there. Why would it not be?
Sure. So gold was money for 5,000 years. And so, it carries a lot of the attributes of money. So money, at the end of the day, none of us want money. We want the things that money buys us, goods and services. So money is just a medium of exchange. And so in order for something to be a good money, it must have a couple main attributes. It needs to be divisible, durable, recognizable, fungible. But one of those, scarce, but also one of those is it needs to be portable, and it must be able to transport it. And so the problem that gold ran into is that the velocity, the speed is very slow. If I want to pay you gold and you're right there, no big deal, I put it on the table. If you're across the country or across the world, the settlement gets very slow. And so in order to speed that up, it had to go into a bank. Now the banker would carry a ledger and he would just mark from my ledger to your ledger. But the problem that we ran into and will always run into is who controls the ledger? And how do we trust that person? How do we know that he doesn't say there's more than it is? How do we know he doesn't steal it? And all the problems that it has. And so we've already seen the problems that will happen. FDR stole the gold in 1933, and so we've already seen that. So they want to return to gold, but how? Now, back then, we were still in an industrial world, meaning a physical world, right? Today, we're in an information world. Today, the world is connected by the internet. Everything's being done digitally, and so gold will not work in that environment. It just won't. Now, they want to go to some gold-backed digital currency, but we go back to the same problem that we had in the past. How do we go, as the world has moved forward, how do we go backwards?
Yeah, we're trying to get counterparties out of the monetary system. That way you don't need to trust any of them. And that's what we talk about Bitcoin, right?
Yeah.
It's you
but
don't
if you
need
use
to
the
trust, you
blockchain
verify.
to
No,
have-
that doesn't matter because a blockchain preserves truth and lies equally. So there's a thing in blockchain called the oracle problem. Whoever put that information into the blockchain, how do you know they were telling the truth? And it's a regress ad infinitum. So you always have the counterparty risk unless it's Bitcoin. Bitcoin is a self-contained system because the Bitcoin lives within the blockchain. It's technically a time chain. If you tether it to anything physical, then you have to trust someone. There's a counterparty there. So I would argue that central banking is actually the culmination of a gold standard. We had to centralize the gold to increase the portability of it. That's how we made it function as money. And with that centralization of money, money is power. Power corrupts. Absolute power corrupts absolutely. We get the most corrupt institution humanity's ever had, which is the central bank growing up around it. What do we have with Bitcoin? We have dematerialized gold. So we don't need to centralize the custody of it because it's trivial for me or anyone else to take self-custody. You can also do other complex arrangements like collaborative custody. So you can chop the key into multiple pieces. You don't need to trust anyone. You can trust 5 or 10 people or whatever it may be. So we get an entirely new institutional reality built on top of a Bitcoin standard that we have never seen on top of a gold standard. So it's a strange way to look at it, because what you end up thinking is this one technological flaw in gold, and that it was not portable, led to the emergence of central banking, which is the dominant institution in the world and the source of many of our problems. So in a Bitcoin world, hopefully we can avoid a lot of that.
Just to go back, and he said a word, dematerialize. So in a physical world, in the old days, we had gold. If I had the gold coin, I have it. If you have it, you have it. But as I already said, kind of in this information world, now we have a ledger. But imagine like a Star Trek movie, if I could just kind of put the gold on the table and it would dematerialize and then transport it and then it would pop back into you. Then we wouldn't have that problem, because you would have it in your hand, a bare instrument. You know you would have it. And that's what Bitcoin provides to us. It dematerializes it so I can still own it and have custody of it without requiring the trust in that ledger.
Another issue that those on the gold equation like to bring up is the idea that the central bank digital currency is in fact the result of Bitcoin, and that Bitcoin was Robert's laughing at this, but it's a question that comes up often, that Bitcoin was the Trojan horse for a central bank digital currency, that Bitcoin lays the groundwork, the foundation, that people are open to the idea of a digital currency, accept it willingly, and it sets up the mindset, and then the CBDC enters. And the E.B. Tucker has a whole theory about this big gold bug as well, big macroeconomist, and saying we don't know who Satoshi Nakamoto really is, that sows a big seed of doubt, that it could be an NSA project, but ultimately the details lead to the same idea that Bitcoin is the Trojan horse facilitating the way for a central bank digital currency, and stemming back to the lack of clarity on the origin with regards to Satoshi Nakamoto. What do you say to that, Mark?
There's so many ways that's wrong. Before we were recording, Robert said, well, they should have picked a worse asset than Bitcoin.
Yeah.
But there's so many ways that that's wrong. So let's break down a couple of those. So first of all, what happens with new technology? So I like E.B. Tucker. I've followed his information for a long time. Sorry, buddy, you're wrong. So if you understand how technology works, there's something called a diffusion of innovation. So it's like a bell curve. And you have the innovators, the people who create it. Then you have the early adopters, the true believers. Those are Robert and I. We didn't create it, but we're the true believers. But then there's something called a chasm before the early majority comes in. The chasm is where something has to change in someone's perspective to be able to bring the early majority in. And so I think it's actually the opposite way. And the reason why is, so you have a brand new technology and people are like, what is this Bitcoin, some magic internet money? I can't trust it. I don't hold it in my hand. This is what the gold bugs say. Something digital could never work. I would never use that. So it's the CBDC that will actually normalize digital money, not the other way around. CBDCs will be like, well, no, this is from the government. This is safe. You can trust it. So then people will use it. So they should have started with the CBDC. People get used to this digital money. Then they go, okay, well, I'll give Bitcoin a try. So that's the first thing, the diffusion of innovation. So you have to understand that. The second thing I would say is, sure, we've heard we don't know who Satoshi Nakamoto is. We use all types of technologies. We don't know who invented them, like a wheel. We all drive on them every day. I don't know who invented the wheel, but yet I use it. But ultimately what I would say is about, was it created by the CIA? And people would ask that with fear, like there's some sort of a backdoor built in, they could rug pull it or whatever. And all the other cryptocurrencies out there, they're proprietary. There's proprietary code, so we don't know how they work. And they want to keep it that way because that's their secret, right? Bitcoin is open source. We say don't trust, verify. So it's open source. We can see all the code. There is no backdoors built into that. So maybe, hypothetically, potentially, the CIA did create it. Sure, maybe. But there's no backdoors. It's open source. And so we can see that. We know that.
That's a key point, is that it is control over the money supply that matters. Every monetary authority or central bank, what they exclusively want is the ability to expand that money supply at will, because that is a way to invoke this shadow taxation called inflation. Bitcoin is the only monetary technology in history that no one can change the supply of. So to assert that it is a Trojan horse for CBDCs makes no sense, because you're going to introduce a money that no one can change. You're going to give people the option to this ultimate form of money just so you can introduce an inferior form of money that you can manipulate the supply of. It makes no sense.
Well,
people would choose the money that's better for them, so you would introduce the thing that's inferior and people won't use it. What the CBDC is a competitive response by the central bank to a technological disruption that Bitcoin introduced.
well, the argument would be that if it were to be revealed that Satoshi Nakamoto was in fact a CIA or NSA operative, that would change the underlying sentiment regarding Bitcoin. And
then they don't understand Bitcoin. It's about the consensus protocol and the integrity of it. It's not about sentiment. People are using Bitcoin because it works, not because they feel good about it.
what about the challenge, Mark, that comes from the limited supply issue that Robert just brought up, the 21 million Bitcoins? Some on the gold side say that you can, with consensus, change the programming to create more Bitcoin, as we've seen with forks and such. Can you do that from a coding point of view?
Yeah, absolutely. Anybody can change Bitcoin anytime they want. All you do is you get the Bitcoin code, you copy it, and you create Michelle's Bitcoin.
No. Can you change the initial Bitcoin 21 million supply with enough consensus, with a 51% consensus?
Sure, but
can that be changed?
Sure, you could. But what would happen is you would create a fork. So that's exactly what happened in 2017, what's known as the block size wars. There's a book written about it. I highly recommend people read it if they want to know more about this. But they wanted to change the rules of Bitcoin. They wanted to have bigger blocks so to have a faster throughput on the base layer. And some people wanted it, some people didn't. So one side got their way, the other side didn't. They forked it, and now you ended up with two. And then they both were called Bitcoin. One Bitcoin Cash and one just Bitcoin, and the market chose. And so yes, anybody can change that whenever they want. If Greenpeace and XRP run the campaign, they want to make the consensus to a POS system because it's better for the environment, great, do that. You want to make it, you want to go to 40 million, great, you should do that too. But the free market will always decide.
I think the best analogy for it is that Bitcoin is just a game. And you can also fork the rules of checkers or the rules of chess or anything else and change the rules as much as you want. But no one's going to want to play with you, right? There's social consensus on the existing rule set of checkers and of chess. And we can fork it and change it. And maybe we develop a little sub-community that wants to play 3D chess with us or whatever it may be. But the vast majority of checkers and chess players in the world will always play that game. And that's what Bitcoin is. It's a game with rules. You choose which rules you want by running a node. No one can coerce you to change that decision. And the social consensus that is arrived upon on that rule set is Bitcoin. So you're asking the question, is it possible with 51% consensus to change it? Yes, it is. But it's against the self-interest of the individual node operators. Why would I choose to run a money that's inferior to an absolutely scarce money? And every change from absolutely scarce is inferior for me because it opens up an attack vector for someone else to debase my money. Why would I ever swap undebasable money for debasable money? It makes no sense.
What if in the scenario that you've reached the 21 million and you're a miner and you want to create more work, more incentive, other than transaction fees or NFTs or the ordinal equivalent?
Nodes decide the rules, miners enforce the rules. So even if miners want to expand the supply, they can't. They have to run the rules that the nodes select.
And they can fork it and they can start mining another chain. They can do that. This is a free market. It's a decentralized system. So if some miners go, shoot, I'd still like to mine new coins, great, then fork it, add 20 more million, and then go mine those. It doesn't mean the market will support it.
No.
That has been a big point that comes up from the gold proponents, because the argument against gold has been, well, it's not unlimited supply, whereas Bitcoin is. So thank you for clearing that one up for us. We're seeing speaking of gold, we're seeing central banks buying up gold potentially as they move away from the dollar. Robert, you and I spoke a while ago, and you said that you do see a time when central banks will be buying Bitcoin as the reserve asset, and that game theory will force everybody else to go along with that. Break that down for us again.
Yeah, so essentially, if a central bank determines with even a 0.1% probability that Bitcoin could be an existential threat to their business model, then it is prudent to put 0.1% of your assets into Bitcoin as a perfect hedge against its success. So if one central bank does that, probably the central bank of a small country, right? Probably El Salvador. They buy some Bitcoin, they put it on their balance sheet. You've now increased the price of Bitcoin or the market capitalization of Bitcoin, which increases its likelihood of success. So when other central banks are running similar calculus, trying to figure out, is Bitcoin a threat to my business or not? Maybe they assign a slightly higher probability. Maybe it's now 0.2%. So they're now going to allocate 0.2% of their assets into Bitcoin as a hedge against its success. This doesn't mean they believe in Bitcoin. You don't need to be ideologically aligned with it. You just need to be doing the prudent thing as a fiduciary. And that increases Bitcoin's market cap again, increases its likelihood of success. The next central bank runs the same calculus, it's 0.3%, so on and so forth. And it culminates in what Bitcoiners theorize is called a reverse bank run. And that would be a scramble by central banks all over the world to sell the dollars they can produce ad infinitum for the only money in the world no one can produce. It's a unlimited upside bet with limited downside, especially in the US where we can export 90% of our inflation. Why would we not print dollars that cost us nothing and acquire Bitcoin? Like, this calculus just hasn't dawned on people at that level yet.
The problem I would say is that Robert used the word prudent. And so that would mean, I would say that the governments certainly are prudent.
Well, I would say prudent in the interest of central bank shareholders.
Yeah, no, you're absolutely right. And that's how game theory works, and they absolutely should. The problem is that those with the most to lose will be the last to move. And they have this hubris that it won't affect them and that they can withstand it. And so we can see, like an example, let's say before the gold standard, we were on the silver standard. Now, China had the most amount of silver. But as the world was moving to a gold standard, China didn't want to go onto a gold standard. They wanted to stay on a silver standard. And China lost their position as a global leader in the world. It's taken them 100 years to get back. And so, yes, that is the prudent thing to do. Certainly the countries, as he said, like El Salvador, will be the first adopters. Some of the countries with the most to lose, probably the US dollar, would be maybe the last to move.
Will be the last, yes. But the game theory holds. I think.
It holds
at
agree.
Every level.
I agree.
It holds in the sense that it's riskier to not have Bitcoin than to have it if other central banks are
just like the game theory of gold held, and
Yeah.
China finally had to come around, but they had lost their position by the time they did.
Individuals, companies, and nation states all want to conserve and expand purchasing power. So at some point, there's going to be a realization at the nation state central bank level that the only way to maintain the purchasing power of central bank shareholders is to start to acquire this thing that's disrupting your business.
Well, we're starting to see it in the portfolios of individuals that they're adding Bitcoin, not necessarily because they're pro-Bitcoin, but because they want to minimize the risk in case they're wrong and to minimize the risk of debasement. And in fact, Bloomberg Intelligence came out with a recent report on this, that they anticipate people substituting some of their bond holdings for 1% Bitcoin holdings under the thesis that it's riskier to not hold Bitcoin than to have some exposure to it.
Yeah, Bloomberg Intelligence has really been coming around to Bitcoin. Last year, they published a piece saying they thought by the end of 2022, Bitcoin would move from a risk-on asset to a risk-off asset. They published another piece, I think it was just this week, showing that Bitcoin has now moved into the third largest asset category for risk-off, with gold being first, U.S. Treasuries being second, Bitcoin being third, above the U.S. dollar and every other currency. And so it's certainly making that transition.
And as its market capitalization grows, it becomes more and more of a risk-off asset because its volatility will contract.
In terms of risk, is there any risk that you see that derails your theory of Bitcoin? And I have asked you this before, but the more I talk to you, the more conviction you seem to have. Well, is there anything that sows a seed of doubt in your mind
This
about
exact
Bitcoin?
question is why Bitcoiners have such deep conviction, because Bitcoiners are adversarial thinkers. They're asking themselves this question all the time. It is indeed the $100 trillion plus question. How do you stop this thing? How do you turn it off? It's just a network that's incentivizing everyone to contribute to its proliferation and success. It's literally paying everyone that touches it to help it succeed. And so it's like a vortex of positive incentives that no one knows how to turn off. So what are the risks? The best answers Bitcoiners have are a black swan, which is an unknown and unknowable unknown. What could this be? Well, obviously I can't say it. It's an unknowable unknown. But maybe there's a cosmological disaster that wipes out the power grid and internet permanently. Maybe there's some type of nuclear apocalypse. But you end up in these very unlikely long tail events when you ask this question deeply. So it lends itself to deepening your conviction in Bitcoin.
Yeah, and as he said, we're adversarial thinkers. We've spent many hours and late nights talking about this and going through, code and through miners and regulations, and it's very hard to come up with that. I was asked by somebody earlier today when I first started buying Bitcoin, and that was in 2015, and Bitcoin was $300. I'm like, oh, you're so lucky you were able to buy it for $300. I said, yeah, you say that knowing what you now know, right? I think today is a better risk-adjusted entry at 30,000 or whatever it is, 26,000 than it was back then at 300, because today I don't really see a failure anymore. It's reached that kind of escape velocity. In 2015, I didn't know what it was, right? And so the risks there's always risks. We don't understand them. We've game planned them to the point it's a black swan event. A lot of people would view governments as a big risk. They'll make it illegal. And certainly we see the government's trying to do that in the United States, but to the point we were just talking about earlier with the game theory. And so while the West, maybe the G7 might want to do that and shoot themselves in the foot or hamstring themselves, we might see the global South start adopting it. As a matter of fact, we already are. And so the greatest risk might be from governments, but even that isn't that big of a risk. It might delay it, it might slow down the process, but it won't kill
And I think we've de-risked that vector a bit because China banned mining. And at the time they banned it, roughly 50% of the global Bitcoin hash rate was coming out of China. It dipped down to, I think, 10, 15%. And today we're still around 20 or 25% of global hash rate coming out of China. So if the most authoritarian, iron-fisted regime in human history cannot get rid of Bitcoin, who can?
Hopefully no one, by your
That's the idea.
by your count. Robert, because I know our viewers are going to want to follow up on this question, a point that you made last time is that you thought that Bitcoin will reach $12.5 million by 2031 in whatever the dollar equivalent is.
Wow.
We'll let you work in inflation there.
Sure.
Adjusted for inflation or not adjusted for inflation. I know there will be a question of follow up with Robert on that. So 12.5 million by 2031?
That's right. So
Still holding that?
Those who live by the crystal ball are damned to eat glass, I've heard. So it's just a prediction. I'm not claiming it's going to hit or whatever. I just looked at the historical expansion rates of fiat currencies and how quickly they lead to hyperinflation. And so I also, in that prediction, said the US dollar would be hyperinflated to worthlessness by 2035. So by the time Bitcoin hits 12.5 million in 2031, I think that had the purchasing power of $1 million US in 2020 dollars at the time I made the prediction.
And that's a big piece.
So in that world, everything is 12x. So if milk is $5 a gallon today, then it's $60 a gallon in that world.
And I think that's the big key. When you hear people make these predictions about a US dollar price valuation at that time, you have to think about how much that US dollar is inflating. Right. So in Zimbabwe, the Zimbabwe dollar was tied 1-to-1 with the US dollar at one point. And then everybody became a billionaire. But then an egg was 350 billion. Right? And so it's everything going up like that. But I think if you want to kind of get into some math, if you're a venture capital investor, you're going to invest in a new piece of technology like Uber when it was pitched, right? Well, how do I value that? Well, what's it disrupting? Well, the limo industry is this big, taxi industry is this big, van share is this big. If we can get 5% of those markets, here's what the valuation would be. So if we look at Bitcoin solely as a store of value asset, which it's way bigger, but let's just look at it as a store of value asset only. What other store of value assets do we have? Gold, certainly. Real estate, sure. Bonds, of course. Equities, right? And so we start looking at all the different store of value assets. We add those up today, there's about 700 trillion. So using this venture capital math, if we get 10% of that, that's 70 trillion. If we get 5% of that, that's 35 trillion. That alone puts Bitcoin at over just 2 million alone on that. So you can get into any way you want, but it certainly has that potential.
But we're still pricing Bitcoin in fiat. And I was chatting with Jeff Booth earlier, and he says that's where the paradigm shift needs to happen, that we start pricing things in Bitcoin, that Bitcoin becomes the unit of measure. I'm assuming you agree with that, Robert, but how do you think we get there?
Yeah, it's a progression. We saw it with gold, actually. Initially, people would hold it as a collectible. They would use it as jewelry for ornamental purposes. And then because it had this relatively scarce supply and these positive monetary properties, that over time people started to use it as a medium of exchange. And as you use the thing as a medium of exchange, people eventually start to denominate prices in that medium. So there's an evolutionary path from store value to medium of exchange to unit of account. You can't go out in the world and like campaign for people to start pricing things in Bitcoin. I'm sure you probably price things in Bitcoin today. I do as well. Like it's you can price anything in terms of anything else, by the way.
You can price it in barrels of oil.
It's just division.
Barrels of oranges, whatever you want.
But most people in the world will begin to use Bitcoin as their denominator once it is broadly accepted as a medium of exchange, which occurs after it's broadly accepted as a store of value asset. I think that's the progression we saw in gold and we're likely to see in Bitcoin.
The other point that has come up in this conference, perhaps not so much in the official discussions, but on the sidelines, is a spiritual religious component to Bitcoin, not necessarily as defined by any of the mainstream religions, not necessarily Christian or Jewish or Muslim, but that it almost has a divine property, a nature to it, that it is the great reset, not from the World Economic Forum, but the great reset that is divinely bestowed upon us. You're smiling.
That's a good question.
This is in line with your type of philosophy, but I'll let Mark handle this one first.
Yeah, actually, 2 days before this Bitcoin conference started was an event called Thank God for Bitcoin, which actually Robert was one of the co-authors of the original book titled Thank God for Bitcoin, which, by the way, shout out to that book. Everyone should read the book, by the way. It's about a 4-hour read, I think, and so
very easy
easy read, highly recommended. It's an amazing perspective. So there was an event titled that. And this is actually something Robert and I have talked about before. What's interesting, I don't know if it's the chicken or the egg, but you see a lot of Bitcoiners who all of a sudden really care about their health and their diet and their family and their relationships, and yes, even their spirituality. And I think a lot of it comes from this long-term perspective. Once you start getting to Bitcoin, you start changing your time perspective. And so then I care about my health for the future, my relationship for the future. Or maybe it's the chicken or the egg where maybe the free thinkers who are already into approving those things come to Bitcoin, or maybe it's a combination thereof. But certainly there is that. Now, I think also sometimes people call Bitcoiners like either a religion or a cult-ish sometimes. And the reason I could see that, I don't consider that, but the reason why I see people calling it that, especially from the outside, is because it sort of has that vibe. And the reason why it does have that vibe is because while mainstream media wants to tell us that we align on identities, we're white male, or you're female, or we're gay, you're straight, trans, whatever it may be, black, white, we don't align on identities. We align on values. And so what you'll see here at the Bitcoin conference is every race or gender or whatever it is, but we're here aligned on values. Now, when it comes to values, there's some values that are smaller and there's higher values, higher level values. And freedom, I believe, is probably the highest level value that you can have. And so what you have is a bunch of people sharing the highest value, almost like a religion would share a value of God. And here we all share a value of freedom. Mm-hmm. And so I think maybe that's what really brings that high vibration here and kind of gives it that cultish religion vibe, maybe?
Yeah, I mean, I would first say that every human culture begins as a cult. It's in the word, actually. We unify ourselves under common symbols or values. And so every human organization has this kind of religious, as Jordan Peterson says, there's like a religious impulse in humans. We have to assign it to something. You know, we look to great leaders and great stories, et cetera, et cetera. And Bitcoin is an amazing story, right? It's the creation myth that is Bitcoin is something that lends a high degree of credence to Bitcoin's decentralization and effectiveness as money. So there's that. I would also say in the Bible, it talks about the value of honest weights and measures, which is not just, what is it, John 1:1, that in the beginning was the Word was God, and with God. The Greek word for word was logos, which meant word or ratio. So this idea of human rationality being dependent on sound money and sound language, precise words, it's very important for human cooperation and adaptation. And I think it's also telling that we have this entire biblical corpus. Jesus is like the ultimate human the whole time, right? He's meeting betrayal with compassion, et cetera, et cetera. There's only one time he gets actually angry, and that is against the money changers in the temple, right? The people that are messing with the weights and measures. Because when you mess with the weights and measures, when you mess with language or you mess with money, you undermine our capacity to adapt to change in the world. You undermine the human enterprise itself. So all Bitcoin is doing is putting us back on a sound monetary standard such that we can deal with the onrushing horizon of the future in a very competent way.
Especially in a world where there seems to be the need to change not just units of measure, but the definitions and well-established concepts. Mark, final thoughts as we wrap up. What was your biggest takeaway from this conference, Bitcoin 2023?
Yeah, I would say a couple of big takeaways. One of the big takeaways is that here we are well into a bear market in Bitcoin priced in US dollars, from a high of 69,000 to somewhere in the $26,000, $30,000 range. Nobody here cares about that.
Right.
You haven't heard that once?
I didn't hear price mentioned once the whole time.
I haven't heard it mentioned once.
I just mentioned it, but yes.
Oh, yeah.
I haven't been asked about it. No one's asking for predictions because, again, that's not why we're here. We're here because we want the freedom to hold our property and transact that as we see fit. So I think that's number one, just kind of scanning the room. And so it's not here a bunch of degenerate gamblers trying to get rich. No, we're here for something much bigger. The second thing I would say...
The ideology is more important.
The ideology,
right?
And the second thing I would say is we're really seeing, unfortunately we're seeing, but of course we knew we'd seen the fight. The fight is coming, right? The adversarial thinkers. We knew that the fight would come. But at the same time, we have presidential candidates literally running on a campaign of being pro-Bitcoin, and not just, and maybe 2 years ago, it was kind of first being picked up by the Republicans, maybe the right, and then the left was saying, ooh, it's this political tool. But now here we have a Republican, a Democrat, and somebody in the middle all running on that. And so I think that's a really dramatic shift. And I think we're really seeing politics for kind of what it is, like this uniparty. And really, it's starting to highlight, no, we have pro-freedom candidates and we have anti-freedom candidates, regardless of what side they're on. So those would probably be the two big shifts and takeaways I had.
So, okay, go ahead, Robert.
I'll give a short one. Bitcoin is winning, right? We might be in a bear market, but I see the brightest, most competent, most ethically aligned group of humans I've ever seen every time I come to one of these events. Yeah. And I'm like, how can these people not win? Like, look what they're competing with in the world. It's a bunch of bullshitters and liars and oppressors. So I think people that are centered on truth, using the best tools available, I don't see how they don't win.
Well, now we're in the fight, as Mark says. How does it go? First they ignore you, then they laugh at you, then they fight you.
Then you win.
Then you win. We'll end it on a winning note then.
All right.
Thank you so much. Enjoyable as always and insightful as always. Robert Breedlove, Mark Moss, really appreciate it.
Thank you, Michelle.
And thank you for watching Kitco News. That wraps up our coverage of Bitcoin 2023. We'll see you soon.
Kitco News special coverage of Bitcoin 2023 is brought to you by Coin Payments. Crypto payments made easy.